stock market is doing really good right now. We are seeing and feeling the surge in prices from the stores to the pumps. It's hitting us where it really hurts, our wallets. Now, Joe Biden says these rising prices are temporary and not a threat to our economy. But how true is that? I want to bring in Brent, President and CEO of Wilsey Asset Management. Thanks for joining me, Brent.
Thank you for having me.
Okay, so let's set the stage for everyone. For those who don't know, why don't we define what inflation is, first of all, and what causes it?
Sure. Well, obviously it's the rising price of goods and services. And the thing is how that is measured, because it's like about 175 components in the consumer price index. And it's a weighted index, meaning some equate for more than others. And it can change too, because many years ago, they used to use the increasing price of housing. Well, now they're using increase of rents. If they had housing in there, it'd be even worse than it is now. So they can change it as well. So they're trying to come up with what the inflation is on these basket of goods. And you could have inflation in your household because of what you're buying. I may not because of what I'm buying.
Yeah, that's true. Okay, so Joe Biden, he said these rising prices are temporary and not a threat to our economy. Is that true, or is it more complicated than that?
Well, it could be. And I've heard him say different things about, well, the more money we put into the economy, the better, because it'll help reduce inflation. What he's trying to say is that if we were to add more money into manufacturing, so we can manufacture more goods and services, then it would bring down the price of goods. Because, again, it's too much money chasing too few goods. But I don't believe he can do that. So I think the more money you put in the economy, the more inflation we're going to have. And I don't believe it's going to be temporary. I think it's going to be longer term. And even today, the Federal Reserve is meeting. They are currently buying about $120 billion in assets to try to keep rates low. Well, that's inflationary. If rates go up, then consumers can't afford as much. So you've got this situation, and I think inflation is here to stay at least for a year or two.
Okay, so long-term inflation. And we expect some inflation recovering from a pandemic. But did you expect it to be this long?
Well, it's not long yet, but it seems like it's going to get that way. And what I'm surprised about is there's what's called the money supply. And that's how much money is in the economy. Now, back in January, it was high. It was like $19 trillion. That's a lot of money for consumers to spend. Yeah. It's now up to $20.4 trillion, so even more money. So the situation is not getting better. It's getting worse. I guess depending on how you look at it. If you have more money in your pocket, that's good, but it's going to be more money chasing too few goods because we don't have people working enough to manufacture these goods. Yeah,
that's a really good point. So second quarter earnings reports have been coming out over the last few weeks. How did businesses do in Q2?
Well, right now you have most of the banks, financial companies reporting. Today we had some technology companies reporting, but the banks, I like to listen to them because they're in touch with the consumer. And consumers are paying down debt. They're doing very well. Their FICO scores are up, so there's a lot of positives there. On the negative side, businesses are flush with cash, so they're not borrowing money from the bank. So again, you got more cash sitting there, and the banks want to loan money. And there's a lot of people that don't want to borrow the money, at least so they can pay it back. So that's a good, bad thing. But looking forward, they're saying things are looking pretty good on the financial companies.
Okay, well, that's something to look forward to in the future. The Treasury Department is expected to hit its federal debt and a statutory limit at the end of the month. So what is that limit? And what does that mean? Well,
the limit, I believe, is around $23 trillion. And in order for them to go beyond that, they have to raise the debt limit. Well, there's right now some talk that that may not happen. Now, if we go back to 2011, when this happened before, it was devastating. We had a market correction, and one day the S&P went down about, 5.6%. That'd be about, on the Dow today, about 2,000 points. It'd be like, oh my gosh, it's terrible. Now, we did have other things back then with the Greek debacle back then. We had European having trouble. Also back in 2011, the U.S. lost their AAA rating, which was just devastating. So this could be a problem. We could have a very rough August where markets drop because they don't agree on raising the debt limit. And if they do, they know that then the Joe Biden administration, they're going to try to get more, $2-3 trillion more to borrow. So the Republicans, they don't want that. So I think it's going to be a little bit of wrestling there.
Yeah, it seems like we just need to get people back to work and producing again. When are we going to see the prices of everyday items that we all purchase, gas, food, go down?
Well, the gas, you bring that one up, that's a whole different story because unfortunately we cut down our supply here in the U.S. and now, I hate to say this, but we're back to depending on the Middle East for our oil. And they did agree saying, okay, we will increase our production back up to pre-pandemic levels over the next 2 years. So that's the good part because we'll have more oil coming in. The bad part is we're sending our money again overseas to the Middle East when we had all the oil here that we needed. So it's unfortunate. I'm not in agreement cutting down the pipelines because that really hurts us right now. So I do not see gas prices going down. I hate to say it, I see them going up longer term as well.
Even more so.
Yes, I'm sorry to say that.
My goodness, thanks for bringing the bad news, Brent.
I'm sorry, I'll try for something better, I don't know.
And with that, we're out of time, so thanks for joining us. Thanks for your expertise. Brent Wilsey, President and CEO of the Wilsey Asset Management, thanks for your expertise.
Thank you very much.
Today.
Thank you for having me.
Want to see more videos like this? Visit OANN.com for immediate access to all the clips you've been waiting to see.